Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the boys from Convoy. How you guys doing?
Good. How are you?
I'm doing very well. And I forgot to say it's Dustin and Jonathan. I sometimes joke and call him Justin. Funny thing, I actually went to the meeting invite and tried to invite Justin. I'm like, why can't I find Justin? Where's Justin? There is no Justin. I just humor in my head. Anyways, back on topic. I thought what we should talk about is what's going on in the market, right? You guys get a lot of interest from investors and homeowners from around the country. I'm pretty clear on what the crystal ball looks like for me, at least in the short term. So let me share what I see coming, and then I'd love to hear about what's going on in Southern California, what's going on in the rest of the country. Does that make sense?
Yep. Yeah.
So, man, I don't have a good feeling for housing market for the rest of the year and early next year. What we saw in June of this year was a housing market that basically stopped when interest rates broke 6%. The housing market kind of reinvigorated itself because we actually had a period where rates went sub 5. That is over. I saw yesterday that the 30-year rate hit 6.25. Cycle peak was 6.28, so let's call it even. I think they're going higher. I think there's every chance that the 30-year conventional loan sees a 7 on it this year. If the housing market broke or froze or whatever at 6, what happens at 7? Oh, by the way, it broke at 6 during the good season. It'll be at 7 in the bad season, meaning housing has seasonality. So, dude, real estate agents, mortgage brokers, the home buyer, the home owner occupant's going to slow down even more. Investors probably go up because it's going to be easier for us to hunt for motivated sellers. I think the deals of the decade between Thanksgiving and New Year's are going to be amazing. We're going to get seller terms. We might even get complete seller financing. So as an investor, I'm ecstatic. As a first-time home buyer, I'm like, this is going to hurt, right? So what are you guys seeing out there?
No, we agree. Obviously, I mean, there was that little blip in conventional rates, so everybody thought, oh, we're getting a breather. But that's obviously not.
5% feels better than 6.
Yeah, yeah. And now, I mean, we said in the last video, but another Yahoo Finance headline today, fear mongering, saying, hey, we're at the highest rate since 2008 again. And, just 3 months ago, we saw that same headline, right? So we're back there. I think it's obviously we're going to continue to go up. Powell has already committed to keeping it going up. So I think we see it, but in our market, we are seeing it, I think, harder than a lot of other markets in terms of.
And your market is Southern California.
Southern California,
that don't know.
correct? Yeah, our local market, and specifically Los Angeles, and transactions obviously have really bottomed out just because these listings are so expensive and no one can afford them, right?
Yeah,
they can't afford them.
Affordability has crashed.
Yeah, and then also right now is, let's say it's a $20 million house or $10 million house. Are they going to put
people are rolling out of their beds now? What?
Yeah,
you guys are living in some highfalutin areas, man. Woo.
Yeah, it's like are they really going to put 20-30% down right now in this market to buy a house priced that high? I mean, it's a little hard to say, right?
Yeah.
Even if it's $2 million, which is, kind of like $1 million house in LA is like a shack,
Yeah.
and
no, it's 2.25.
Yeah,
you get in Orange County, you can be in the 3s. It's just
exactly.
it's an expensive part of the world.
Yeah. So, I mean, are those, like you said, first-time home buyers or people that are trying to buy houses to live in, like they're putting in 400, 500 grand for down payment,
Yeah.
or even $1 million, and they're like, how are they gonna then make the payments? What happens if the market crashes? Do they have stability? Like all of that's kind of into question. So everyone is slowing down. We're seeing a lot of listings sit for 30 days, 60 days.
Yeah, something else I'm seeing, I'd love to hear from you again, kind of LA specific, is LA was a very big market for flipping. Obviously, I have 2 of my experts that flip in different parts of Southern California. I suspect, and I think I read this, John Burns Real Estate Consulting. I might be wrong. It might have been Bloomberg actually, but what they're saying is LA is seeing a disproportionate amount of listings come off turned into rentals. Have you guys started to see that, or maybe that doesn't hit your radar?
Yeah, I mean the amount, like we were speaking on our first video, um because of the less amount of activity that's being put in terms of offers, and getting offers that at least the seller would want, not
Mhm.
talking offers
Yeah.
5, 10, 20% below market, especially in LA, because sellers, builders, flippers, etc., all in LA come to LA to fix and flip and
Mhm.
whatnot, so that they can get top premium dollar.
Sure.
But they're not willing to. I haven't seen sellers at least cave as much on the bigger stuff. 1.5 to 2.5.
Mhm.
They'll just long term rent it out until the market turns. So we're seeing listings go that are selling for 3 mil, and they'll just rent it out for 15K as much as they can until there's somebody that's willing to offer 3 mil for a 2,700 square foot house.
Yeah. Yeah, this is going to be really interesting. Because I think there's going to be a lot of people that decide to take it off market and rent. And it'll be interesting to see how that plays out over the next 12 to 18 months. Because again, right, let's pretend you're a flipper doing a $2 million project. Most of them, at least in my experience, are getting some kind of debt on that, right? Very few of them have the stroke to write a check. So what they're doing is they're coming out of this going, darn it, I can't get it. I missed the peak. I missed my market. Basically, what a lot of them are thinking is, let's get to next summer. They don't want to leave it vacant because that's expensive. Let's fill it up. Your example, 15 grand a month. Let's say they get it. I think a lot of them are like, hey, I just need somebody to rent it for a year. Get me to next summer. Yeah. Is that what they're thinking? Or do you think this just becomes a long-term hold for years to come?
I think you're pretty spot on, right? I mean, everyone right now is kind of looking for the next thing, right? The next thing that'll kind of bring them a little bit of breathing room, allow them to kind of relax a little bit.
Just hold on, right?
Yeah, exactly. So it's good, like you said, it'll be very interesting on how the market shifts. But again, I mean, if they're not really selling, I'm thinking kind of crash wise especially in the LA market. I mean, it's going to be hard to crash if no one's selling, if everyone's keeping their properties.
Yeah, no, it's I think LA is one of the markets that I think people are going to be shocked by, because right now a lot of folks can look at the data and say LA's crashing. Right, inventory spike, which again we talked about. That happened on July 20th. National Association of Realtors scared everybody. Everybody wanted the top listings. Now the listings are being pulled. I think active listings in LA will be lower in December than they are today, which really hurts your crash call if that's what you happen to be calling for. So, and again, there will be a crash in transactions, because what we are going to see, just think about it. June, right? One of my experts, top 1% agent in the country. We're not talking 1% in her area. We're talking about a 1% agent in the country. Said her business fell 50% in June. Wow. Now it's Seattle, not LA, but still pretty highfalutin area, right? Her median price is 1.3. So close. Do we go to 7? This is why it hurts my head. We go to 7% in the winter, which is already slow. And we saw what happened in 6 in the summer. It's going to be crickets, right? We're going to have buyers and sellers not agree. Sellers want X, buyers want Y. We're not going to, the housing market will be on life support until March. We're going to have to get to the next spring selling season to see who breaks first. That's what I think's coming.
And I mean, we agree. We'll see. It's just no one has a crystal ball, because obviously our Jerome Powell,
when he could change it in a minute. Yeah, exactly.
He wakes up and he says, I'm dropping rates, and then everything's good, So I think we definitely do agree. And obviously it's not just the LA market. We're seeing other markets though. Like I think certain markets in Texas, Florida are still pretty hot. I'm getting a lot of clients still buying, and appraisals still coming in over,
I heard from an investor in Florida this morning. It's like, I know the rest of the market, I know the rest of the country's slowing down, but everything sells. She in this case, everything is selling for at least 10K over list. I'm like, wow, still? She's like, yep, more people moving here than leaving. So it's great.
Even the luxury home market, because my client that had just bought a $5 million new build out there in Boca Raton, there was a house that listed 2 doors down for 6.7, and he was like, hey, I want that house.
Yeah.
So it just, and then that went immediate. Like that
Wow.
was gone. It was at 6.7, gone. And now like you can't even like find something in that area for that amount. But all these home prices are still like they're still going up.
Yeah. A lot of money moving to Florida, a lot of good stuff. What are you guys seeing from investors around the country? I think again, this is just my opinion. I think a lot of new investors, and by new investors, anybody less than 4 years, they actually don't yet realize how much power they are going to have, right? The market is shifting from the most extreme seller's market to not a balanced market. I think most of the country over the winter is going to be a buyer's market, maybe with the exception of Florida or some other markets. Again, I don't know them. I can only tell you what I hear. But I think most investors don't realize, again, don't pay list price, get closing cost credit, get rates buy downs, use every lever you can to make your deal better. What are you guys seeing across the country?
Yeah, I mean, I just thought about a couple conversations I've had where I had some new investors in California and they're realizing that they can't afford the prices in California, which is understandable. So they're going out into places, let's just say Ohio or
Yeah.
somewhere in the Midwest, and they're finding properties that are, 150, 200K. And they're like, I got 3 here. I'm paying asking price. It's a great deal. And I'm looking at it and it's like, it's been on the market for 90 days. It's an
Yeah.
investment property, clearly. And in my mind, I'm like, I'm running the numbers. It wasn't bought 90 days ago. It wasn't bought 60 days ago. Just because it's cheap, it's not better. Okay. Just
I'm so glad you said that. That is the biggest. I have so many California investors, specifically Silicon Valley and LA. They're like, Michael, I don't know how you do it in California. You're crazy, blah, blah, blah. I'm going to the Midwest. I can buy houses for the cost of my car. I can't tell you how many times I've heard that. I'm like, cheap is not better. And the one that really bugs me is your example, Dustin. It's been on the market 100 days and I'm going to pay list price. Are you freaking kidding me?
Yeah.
Every local investor has kicked that rock 17 times. You think you're coming out of here because you're an LA investor and you got this deep pockets and you're going to get a deal? You're smoking crack. Stop it. Stop it. Stop paying list price. Drives me crazy.
No, that's 100% true. They think just because they're from California, that if they go out to Ohio, they got much deeper line pockets. But dude, there's a lot of rich people in Ohio. There's a lot of
yes,
experienced rich people in Ohio that keep an eye on this every single hour. They've turned it down for a rean.
Yeah.
I cannot get behind you paying.
Dude, they've turned it down 17 times.
Yeah.
Dude, they've talked to that listing agent a lot. That's the arrogance I see from some California investors is next level. It's no, folks, there are amazing investors in Ohio. And if it's been listed for 100 days, why are you writing it at list price? And oh, by the way, if you're a California investor and if you don't fly to your market, shame on you. Shame on you. You deserve to lose money, right? Crazy stuff. What else are you guys seeing out there? And we'll wrap up episode 3.
I mean, that's pretty much it. I mean, people we're like we kind of touched on before, but a lot of high net worth investors, especially, right, they're not moving as fast, right? And I'm seeing a lot of deals actually fall out of escrow, like go into escrow, fall out of escrow because they'll go into kind of like inspection, due diligence, all that, and they'll find 1 or 2 things, and the seller's not willing to move on him, and then they're just like, hey, okay, then we'll just walk away. So I'm seeing a lot of escrows fall out, which I think it's a little scary because it's like all this work is being done to put a transaction in, and not actually going through. So, the amount of I mean, I'm sure it skews numbers too, and we'll probably see it in like a month or two, but the number of listings and escrows that have gone in and have fallen out.
This is why, folks, you have a buy box. This is why you look at it every day. And one of the things you should be tracking is coming off, going back on. And oh, by the way, when it goes back on, you may have found a motivated seller because they probably already spent that money, at least mentally. Again, I am ecstatic for what's coming for investors, first-time homeowners. It's going to get worse. Affordability is going to go down. It can't help but go down. Prices stay flat, rates go up. Simple math.
Yeah.
But investors, get creative. Get creative. So where should people reach out to you if they wanted to see how you could help?
email private client at convoyhomeloans.com, and please let us know that you're from ORAT.
Awesome, guys. Thank you very much again. Just tell them you came from ORAT. You'll get Jonathan and or Dustin to work with you directly. Thanks, guys.
Thank you.
Thank
Bye.
you.